The tech trade overall has been on a tear over the last 2 years, as you know, during this bull market. Nasdaq seeing a 66% rise. My next guest says that's a positive sign for the sector heading into next year. Joining me now, Nick Colas of DataTrek Research. Good to see you. Welcome back. So this is about momentum that's going to carry us to a positive year three?
Yes, it is. If you look back to on the Nasdaq back to 71 when it started, you'll find that we've had 10 instances where we could have had a third year of a bull market. We just had 2. So the question is, are we going to get a third? In 6 of 10 times, Nasdaq continued to rally. In 4 of 10 times, it didn't. The overall average return of those 10 years is 4.4%, so not awesome, but it's entirely due to the 4 losing years, which were 84, 87, 1990, and 2011. In 3 of those, as I call out those dates, you'll recognize the 87 crash, the 90 invasion of Kuwait by Iraq, and then the 2011 Greek debt crisis. That's what killed those Nasdaq rallies. 84 was a garden variety tech recession. When you take those numbers out, the average return for the Nasdaq in year 3 is 13.3%. So as long as we don't have any one of those big catalytic events, the momentum that you pointed out is historically set to continue, and we should have at least a 10% return, if not better. We can get as much as 20% in some of these year 3 rallies.
But doesn't this cut both ways, though? I mean, I'm looking at these years, and of course, you have those bad average returns, and we have crises during those periods of time. But you could say, I think now, well, have we pulled forward a lot of gains? We haven't had a crisis. We've had the opposite. We've had exuberance over AI. So given the strength of the last 2 years, that doesn't mean that the third year could be a disappointment?
I think if we had seen Nasdaq really underperform, say after June, we know that we had a big rip in the first half of this year, but there's been a lot of healthy rotation since then, and Nasdaq's only really begun to get ahead of steam again in the last month, outperforming the S&P. So it's not like we've had just a uniform, monochromatic Nasdaq rally for 2 years. Other groups have taken leadership occasionally, even small caps have taken leadership occasionally, and so I think it's a healthier market dynamic than what we had, say, in the late 1990s, where we all recall it was just tech that worked basically for 3 years on the run. That's not this kind of trade.
No, I know, but over 12 months, the Nasdaq's up 45%.
Yes, but if you go back and look for the 3-year returns, including the 22 bull bear market, then they're much more modest. We're down in the 20% range and much more normal on a compounded growth basis. So we got to take the good with the bad, which I think is your point. And then based on that, the Nasdaq still has some room to run. The valuations are huge. There's no doubt about that. But valuations are a notoriously bad indicator of 1-year forward returns. So we're going to kind of take that off the table and think about momentum and think about catalysts, more negative catalysts than positive catalysts.